Forget everything you knew about Japan Inc. A brutal technological war has just been declared between the nation's megabanks and SBI, and it's happening exactly as Tokyo kicks off its most explosive fintech week. Welcome to Japan Digital Asset Weekly, episode 71. I'm Keisuke Wakyodo and venture partner at Onigi Capital. Today, we focus on the Japanese market moving at an unprecedented pace. From the Financial Services Agency officially certifying Megabank stablecoin trials to SBI Holdings' aggressive majority acquisition of Singapore's Coinhako parent, the integration of traditional and next-generation finance is no longer a future concept. It is a live operation. Let's get straight to the facts. The highly anticipated Japan Fintech Week 2026 officially begins on February 24th, running for 2 full weeks until March 6th. This massive event, co-hosted by the FSA and the Fintech Association of Japan, serves as the primary stage for Japan to signal its regulatory and technological direction to the global community. The week is anchored 2 major pillars: the GFTN Forum Japan and the International Forum organized by GFTN Japan, and the 10th anniversary of FinSum organized by the FSA and Nikkei. However, for those in the digital asset space, the most significant action is found in the side events concentrated around the Tokyo Station area. This week alone, we have a relentless schedule. Future of Digital Money on February 24th, the Blockchain Summit co-hosted by Credit Saison and Pacific Meta on February 25th, and CoinPost Money X on February 27th. This represents the highest density of institutional players, regulators, and innovators in Tokyo to date, with hundreds of overseas delegates expected to arrive. Meet Wakyodo on the ground during Japan Fintech Week. I'll be speaking at the GFTN Founders Peak and moderating the Invest Hong Kong Luncheon Seminar on February 27th. Our background in TradFi, blockchain, and policy advocacy is your most effective bridge to the Japanese market. On February 13th, a major power move was made by Japan's traditional financial giants. The 3 megabanks, MUFG, SMBC, and Mizuho, alongside Nomura and Daiwa Securities, announced a joint pilot to settle securities using JPY-denominated stablecoins. Simultaneously, the FSA certified this trial as an official support project. The experiment utilizes blockchain technology to enable delivery versus payment, allowing the transfer of legal rights for stocks and bonds to occur simultaneously with the settlement funds. Finance Minister Katem praised the move, stating that improving settlement processes through cross-industry efforts is vital to remain competitive globally. This trial will utilize the Progmat platform, a joint venture infrastructure designed specifically for bank-issued stablecoins. However, the unified Japan Inc. front has fractured in a very public way. SBI Holdings CEO Yoshitaka Kitao responded to these reports on X, explicitly stating SBI refused to join this. He further slammed the initiative as an attempt to revive the convoy system, a legacy Japanese regulatory style where industry players move at the pace of the slowest member. Kitao-san emphasized that SBI will not participate in anti-competitive or uniform structures, but will instead compete globally with innovative technology. SBI is already moving forward with its own Stream network, a layer 1 blockchain developed with Static Group, and its own proprietary stablecoin. We are now observing a direct competitive tech war between the Megabank Progmat alliance and the SBI Static ecosystem. Simultaneous with its domestic maneuvers, SBI Holdings is aggressively expanding its footprint in Southeast Asia. On February 13th, SBI announced a basic agreement to acquire majority stake in Housebuild, the Singapore-based parent company of the leading exchange Coinhako. The transaction is being executed through SBI Ventures Asset, a fully owned subsidiary based in Singapore. By injecting capital and acquiring shares from existing shareholders, SBI will make Housebuild a consolidated subsidiary. Coinhako is one of the few entities to hold a major payment institution license from the Monetary Authority of Singapore. For SBI, this is a strategic move to build a regulated digital asset corridor between Singapore and Tokyo. By integrating Coinhako's retail and institutional services, SBI aims to maximum synergies between traditional financial services and next-generation digital infrastructure, providing a seamless bridge for capital flowing between Japan and the rest of Asia. The takeaway from these developments is a clear and final bifurcation of Japanese financial market. We are no longer looking at the slow-moving unified industry. Instead, we have 2 powerful competing technological stacks fighting for dominance over the tokenization of 2,000 trillion Japanese yen in household assets. For overseas institutions, this competition has effectively ended the wait-and-see era. The Takaichi administration's focus on growth and competition is forcing the FSA to authorize multiple competing infrastructures. This provides the global players with a clear, rapid chance. Join the bank-led Progmat ecosystem or align with the high-speed, independent SBI Static orbit. Either way, the path to market entry in Japan is now faster and more transparent than it has been a decade. That's all for episode 71 of Japan Digital Asset Weekly. If you are in Tokyo for Fintech Week, I look forward to seeing each of you. If you found this episode helpful, please like, subscribe, and share. Thanks for watching, and see you next Monday.